afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Kelvin Wong, market strategist at CMC Markets, is our guest today. Kelvin, good afternoon and welcome this Wednesday.
Hi, good afternoon, Brian. Good to see you again.
Now, Kelvin, before we get your insights, we're going to take a look, of course, as usual, at crypto markets and regional stock markets. We will start with crypto markets. Bitcoin is at 20,347.7. It's down 1.41%. Ethereum is at 1,093.98. It's down 3.16%. Now, looking across to regional stock markets, we start with the SGX. It's down 0.3%. The KLSC is down 0.74%. Shanghai is down 0.36%. ASX All Ordinaries is down 0.12%. The Nikkei is down 0.08%. The Hang Seng is down 1.26%. And rounding up the markets, we've got the Kospi, which is down 1.9%. It's a sea of red. Kelvin, tell us why.
So what we could see over here is a bit of a leap and lag kind of process in the regional stock market. So do not forget over here is that in the start of this week, the some of the regional market, especially the Hong Kong related stock like the Hang Seng and the Hang Seng Tech, they actually rallied at the start of this week. So what we could see now is a bit of profit taking that is taking shape right now in the regional stock market.
Now, if you look at what's really interesting, we've got on the FX markets a very strong rally seen in the US dollar, Japan, with the Japanese yen closing really to a 24-year low not seen since October 1998. Tell us a little bit about that and tell us about some of the reasons behind it.
Okay, so if we were to look at so this is the chart, right? This is the long-term chart of the dollar yen. So basically, it's a 3-monthly chart. So what we could see over here is very clearly, right? Technically, they did a very we call it kind of a major bottoming formation since 1995. So that is more than we're talking about a 20-year plus of bottoming formation. So what we could see a very clear bullish breakout, okay, of this formation, starting in the March this year. So what we could see over here is we start to see 1 month, 2 months, 3 months of very short rally already. So potentially one of the fundamental reasons that is supporting this strong dollar yen rally was in the longer term is due to this. Okay, 1 second. Let me open up the chart again. Okay, it's due to this yield spread between the US Treasury yield and the 10-year JGB that is ticking upwards. That means what we could see right now over here is the yield advantage is still skewed towards the US Treasury. So for sure, why? Because if you look at the JGB 10-year on the bottom, on the top here, it's actually being intervened by the Bank of Japan to prevent it from going up above 0.25%. So very clear, or 0.27%. So very clearly, what we see over here is that if keeping your money in fixed income JGB, it offers no comparative advantage rather than placing your money in a fixed deposit dominated by US dollar. So that is one of the what I call it clearest fundamental reason that is supporting this dollar strength over this yuan itself. So what's interesting over here is that this is a long-term approach. So if you look at a very short-term perspective, right, what yesterday itself was very stunning. Why? Because usually, right, dollar strength is actually seen across the board in all the major pair. So if we see dollar strength coming into the market, the euro should actually weaken against the dollar. The sterling should actually weaken against the dollar significantly. Mm-hmm. But however, the Aussie dollar also should weaken against the dollar. But however, they managed to actually hold last week low. That means the sole currency that is underperforming the dollar yesterday, we talk about the majors, is the Japanese yuan. All right. So what's interesting over here is that why this Japanese yuan actually underperformed against the dollar, because there's nothing come up. There's no news that's being said over here regarding to the JPY. In fact, yesterday there's some verbal we call it rumblings saying that the BOJ right now is pretty much concerned about this rate of what we call it weakening against the Japanese yen over the dollar. But what's interesting over here is actually more driven by technical factors. Is because of this 13570. So yesterday, this is the hourly chart of the dollar yuan. So you could see that once this 13570 is being taken out yesterday, so that's around the timing around around European timing. So there is 4 6 p.m. Singapore timing. So that's around still Europe time, 2 hours before the US session opened yesterday. So once this level broke out, right, what we could see over here is that you see a very steep ascent in the hourly chart on the dollar yen. So it's a one straight line up. So what we could see over here is that it's more clearly technical driven. Various stop loss level is being hit, or some option level is being hit at this 135.70 level that triggered this short term push up. So bear in mind, right, let's say if I look at the short term, momentum is still pretty much intact right now. So as long as this 135.70/135.30 holds, potentially we could see a bit of more push out towards the next resistance at this 135.20, 137.20, 137.50. So that is around the 6th and 29 September 1998 swing high area.
Okay, but my key question to you, Kelvin, is this: we have a clear policy divergence, and the yield
Yes.
spread is going to widen next month when the Fed increases, as all expect, instead of 50 basis point by 75 basis point.
Yes.
That's going to inflation is not a problem for the BOJ right now, but wouldn't you then have the impact then of imported inflation as the yen weakens?
Yeah, so now the problem with this JPY over here is, okay, number one, we got to understand over here is that definitely firstly, the Japanese economy has been living in the land of deflation for close to more than 10 years. The land of
Correct.
deflation. So it's only that until recently we start to see the current core inflation, which is excluding energy, inching up to 2.1% last month. So for the month of April, pardon me, not this month, April. So it's slightly above the BOJ target of 2%, but it's only we call it, it's not substantiable. It's not like they really above BOJ target by a fair amount, or in a very substantial, or we call 3 months or 4 months more substantial above the BOJ amount. So what I believe that over here is that BOJ itself, they are trying to create this inflationary shock into the Japanese economy to actually force consumer, especially corporates, to actually front load their capital investment. Because we talk about in the past, right, if you are facing in a land of deflationary pressure,
Correct.
which is potentially liquidity trap, that means we start to see, even though interest rate is low, but corporates do not want to actually invest in capital investment. Why? Because they say that, hey, if I invest now, it doesn't mean I could actually, it doesn't because make a difference if I invest 1 year or 2 years down the road, because prices are
Correct.
still the same, still cheap. But if they will force this inflationary shock coming into the economy right now, corporations will be forced to actually front load their investment plan. That means they will be forced to do capital investment right now instead of delaying 1 to 2 years down the road ahead. So that could be actually the game plan of BOJ to actually create that inflationary shock, hopefully to actually spur capital investment into Japan in a much more we call it a timely manner. But that definitely be but that definitely be number one is, but the close eyes one about political situation, because if you're talking about politics, right, the rivals, or the opposition camp of the current PM right now has started to play this ball game, saying that, hey, you're actually supporting BOJ to actually created this imported inflation, which make cost of living much more expensive. Talk about imported inflation, but that will only come into play that if we start to face we call it election campaign, maybe this year or next year, which I do not see. I don't think there's an intermediate house election that is coming up pretty soon in Japan. So that could be not that could not be an issue, the cost of living issue in the Japanese political cycle at this moment in time. Yeah.
Now, Kelvin, those are interesting insights. Thank you very much for sharing that, and thanks for coming on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on Biztech's Asian Midday Market Watch, powered by Al Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Al Rajhi Bank's social media platform. Thank you very much for tuning in.